Coming up on today's episode.
If you piss a tenant off too much, then
it's a mess.
Yeah, that's right. So then you increase your risk of them walking. They'll pull apart their contract and find some loophole to get out. And so you don't want that. So you got to be respectful is probably the best term that I put it for the client, so that whatever is promised, that's what we want to deliver.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together. Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Jo Agresta. Now, this episode is a little different because we're about to kick off a 6-part masterclass series on childcare development powered by Aston Constructions and Builds. So I'm so excited. For the next 6 episodes, we're going to explore and unpack how childcare developments actually come together. From identifying potential sites, through planning, development, funding, all the way through to delivery. So rather than just speaking about theory, this series is designed to give you a clearer picture and I guess how these properties are actually going to work in the real world. So we're actually going to go out on site. We're going to talk with Michael and Amalia, who are the experts in this space. We're going to let them lead the series and you're going to listen and learn so much from these guys. So what are we going to cover in the next few episodes? We'll do how developers identify suitable childcare locations, what risks are assessed before a project moves forward, how the development process works behind the scenes, and what investors need to understand before considering a project like this. So today's episode is really about setting the foundation, which is where we all need to start. We're going to start by unpacking why childcare has become such a specialised commercial asset class, how developers begin assessing opportunities, and who this type of development actually suits. So, best place to start is why childcare is different. Michael, let's talk about it. So, when you hear people say commercial property, they tend to lump everything together. What makes childcare such a unique asset class?
Thanks, Jo, and thanks for having us in the podcast. We're really excited. We're excited about childcare because it's a topic that's on the forefront of everyone's mind. The governments are throwing truckloads of money in childcare. Everyone you speak to, childcare. So it's really opportune, and we're really excited about childcare. So we'll delve in first and try to explain to our viewers on why childcare, why now, whereabouts, and our sort of logic process on where we're at. And maybe Amalia can tell us a little bit about the landscape of investment and why we've decided to go to commercial, and then we'll unpack a bit about childcare specific.
Yes.
Love
So as most of the investors who are listening to this podcast, they might be aware that investing into general residential homes becoming not really, no longer equitable. Like it's not an asset class anymore that you can rely on that delivers the right growth and the right yields. So people started to look outside of that realm and they started to upgrade into co-living multi-unit developments. And the IS commercial is coming to be a big player in the investor field. And then you always have to find something that you niche down on and you become an expert at. And when I met Michael, he was focusing a lot on different commercial developments. And then he found a path forward with childcare operators to develop a product in this niche market. So it's always a good idea to niche down when you're looking at your investing and your portfolio, adjust as you go. But childcare has been one of those asset classes that not only it has longevity, but it's such a specialized field that not many players are doing it.
No,
either.
they're not.
So,
Well, this is why I exactly wanted you two here as the experts. So, and you know what, I probably should have done this a little bit earlier, but I got excited because if for those of you who regularly listen, Michael Leipnik, Amalia Vincze. So they've been on the podcast before. So we'll have links to their previous episodes below, so you can actually go check out what they do and why we've brought them back, because Packed with Value, we did a bit of a summary of the whole journey, but I was like, no. Commercial is a whole different beast. And then we layer in childcare assets as a specialized class. Got to have that unpacked properly, because there's such a big opportunity. Like, even for myself, I've started now to look at my equity and go, okay, at what point am I going to talk to Michael? I'm talking to brokers because I really see the value in it. So it's well explained. And I think that's, it's interesting because, like you said, if we talk about what commercial assets are, people typically go to, like, what are some of the assets? It's like retail.
Retail, warehousing.
Coffee shop, office spaces.
Yep. And like, that's typically where people go, cool, I'm going to think commercial, I'm going to go buy that. Why is it for you guys that you're kind of like, how did the childcare opportunity come up?
So my background at Aston, we've been building for about 20 years, developing for about 15 odd years, and mainly residential sector.
Yeah.
And what's happened, the landscape has changed, especially in Victoria. The landscape changed where now it's out of alignment for the risk versus the reward. And the other aspect which has really put pressure onto residential side is the bar's been lifted by all the authorities, by the building code, by VCAT. It's all in the tenant's favour. Now, if you move over to commercial world, and that the government's attitude is that if you're in the commercial sector, you're big enough and strong enough to sort your own battles. So there's less regulation, there is less legislation for how that commercial transaction happens. So that was already one exciting thing. The other factors that we love about childcare are that you can de-risk a project in that commercial sector, because you can get long-term, if you do it right and you have an attractive product in the right time, right place, then you can snare a tenant that's on board for 15 years plus, 10 extension. And these are crazy length of period that you sign a tenant compared to anything residential.
Gotcha.
And also it's even well and above your general commercial. So then let's say that we're very comfortable with moving away from residential for lots of factors, for return legislation, all the items that we've just spoke about. If you go to general commercial, then that's also a little bit of a tough spot at the moment in the climate in Victoria. So commercial tenancies vacancies, should I say, are starting to spike up. Also, bankruptcies are a little bit of a risk in that smaller retail. So there's risks that are increasing for general commercial. Childcare is a standout at the moment. It might not be forever, but certainly at the moment, all the criteria are pointing towards that. And luckily, I've both been involved in childcare in Aston Constructions for about 4 or 5 years now.
That's a long time.
I think I was lucky getting, I fell into it because I had one of my good clients that he just happened to buy a site that had a permit for childcare, and he said, Mike, can you build childcare? So I look at it, I didn't even have a commercial license at that time. I look into it. Yeah, sure. We can build childcare. So we had to quickly move a bit of a paradigm shift to quickly understand what was the demands for that for that type of asset class. But we've had a lot of water under the bridge, and we've experienced things, and just like you do, some you learn the hard way, and some you pay for experience.
Yeah.
But certainly we're in a place now where we've got a clear understanding, and we know what it makes childcare the pathway to de-risk it, and a smoother pathway for us. Because what we do is we want to make sure that whatever we go into is going to have the best chance of success,
of course,
for us and for our clients and for our investors and for our stakeholders.
Well, I always go back to it's a lot to take on, right? Like, a lot of customers think like, oh, well, I don't trust anyone, but I trust myself. So they start to embark on the journey by themselves. But as everyone who's tuning in knows, I'm a big advocate for using professionals for a very big reason, because you're spending a lot of money and you've got to have the right experts in your corner before you make these big mistakes. And with commercial, you're playing with a lot of money. for a return, and it's a whole different kettle of fish to investing residentially. And I can vouch for that because I did a lot of residential investing, but I would not be comfortable doing my own commercial investing.
Sure.
Absolutely not, because I don't understand it well enough to pull the trigger and go, yeah, cool, I'll do that. It's like, no, I have to engage. So I think one of the things, Amalia, like from your experience speaking with the actual investors and people exploring this space, what do people usually misunderstand about this, the childcare specific asset or the development process when they kick off with like you or Michael? Yeah.
Because there's so many different types of investors that, would come into becoming a childcare investor. There is someone who might have enough funds, and you do require significant amounts of funds into a project when you're a singular investor going into it.
Yep.
And it's a different story when we're putting together a group of
Company.
investors, a specialized SPV that, people go and become a unit shareholder within. So there's two
parties.
two different paths for someone to be part of a childcare investment. Which one would you like me to go to?
Well, that's my next question. So let's break it down for everyone listening. So if you're about to embark on this journey, you've basically got the option that you might be cashed up enough to do it by yourself.
Mhm.
And then you've got the option where you have a lot of equity, but maybe you can't afford to do it by yourself. So you're going to have to go into what's called either a syndicate. Is that right?
Yes.
Yeah. So we've got syndicate. And we've got you're a rich person that can do it by yourself. Who are you dealing with mainly first in this space? Like who's the most common person that comes to you?
Right now, the more sophisticated investors that come to us, because we are a specialist in the childcare development field within Victoria and Queensland now. So we are licensed in Queensland as well. So we would have, high net worth investor who is looking at expanding their portfolio and going into the commercial playing field. They want a de-risked product and they want certainty on the journey and they want to know the exact returns that they're going to receive at exact particular timeframes.
Absolutely. And it makes sense because that's like the de-risking it side, right? It's like, and that's where you have a difference of, I think when you look at a retail shop where they're going to put a restaurant in, I feel like that's very high risk from a tenant perspective because
a lot is dependent on the operator.
That's right.
And then their marketing, where, we reverse engineer pretty much everything for the investor or, the armchair developer coming on board with us, because we do guide them through the whole process. And we actually do hope that they will become developers later on and they will do more projects.
Because it becomes like a pathway for them too after they do their first development. You would think that. Yeah.
I mean, in Melbourne especially, I feel like property and investing and property development is kind of like a sport.
Yeah, it is.
So people do get addicted to it. And when they see the success and when they see, the project pop out of the ground and, with the childcare and the swim school, getting to a lock-up stage and you get to walk through and see it, like it's so exciting. The first thing that the client asks, it's like, okay, where can we go again? Where's the next site? Where should I be doing another project with you guys?
It's huge. And yeah, Michael, your perspective too, like I'm looking at this whole landscape. So it's like if someone's going to go into this, like the ideal customer, let's kind of talk about the listeners who are tuning in today. They're probably thinking, I don't know if I qualify. Let's qualify it, right? Yeah. So what's the ideal investor kind of look like?
I think, so number one is the duration of a childcare development is somewhere between about 24 to 36 months.
Yeah.
So you would say that it's probably a medium-term investment. And the beauty with the childcare is that it's a numbers base. It's not emotional. So with your residential, it's all about location and styling and you have to get all of those right to hit it off. With the childcare, we reverse engineer. So we're looking for a commitment from a tenant first, because a tenant, we see them, there's lots of stakeholders in a development project and especially in childcare. So I'll run through some of the stakeholders that we have to consider in a project. So our first biggest stakeholder is going to be either our client or the investors. because we want to protect them. We want to protect, so the tenants are another stakeholder and we need to protect their interests. We have to be mindful and respectful of their interests. Having said that, is that right up front, you negotiate a rate of return with your tenant.
That's so interesting that it starts with the tenancy in this case, because as you know, in residential property, and for all our listeners, that's the last step. So you get the asset, you do all of that first, then the last step is, okay, now we have to rent it out and give it to a property manager.
Yes.
So it's interesting to me that you guys are going to start at that point outside of the target audience. So if I could just go back for one step, so who can basically enter this market, and then we'll go back to the stakeholders.
All right. Well, that's an interesting question, because if we have a look, and people will go online and you'll see dozens and dozens of childcares and plans and permit sites and product that's for sale.
Yeah.
And it's being a specialized asset, it's a dual-edged sword.
Hmm.
If you do it well, then you're really going to succeed, because the ones that are done well are it's a limited amount in the market, and there's lots of ones that are not done well.
Yeah,
So
of course.
this is good for us because it weeds out your people that don't really understand that type of asset.
And that's who we're exactly going to try and, like, for all you listeners who are like, I've been trying to understand this better, this is exactly the series. You're in the right place.
It's definitely in the right place. We come across quite often sites that people they've literally gone, oh, great, I've got a plot of land. They know intrinsically childcare's good. It's a good development. So they literally just go about getting some permits and off they proceed.
Wow.
And it's literally wrong from day one.
Yeah. And that makes it a mess from day one.
It's difficult for them to resurrect and make a success out of a project that starts off on the wrong foot.
Of course. Makes sense.
That's what we really are. That's what we're wanting to help our people that are with us for the journey. We don't want them to get it all wrong. We want them to succeed. We want to succeed. We'll do that as a team together to really have the chance of the best outcome that you can in a development project.
Absolutely. And going over to you, Amalia.
So really, ideally who it suits is, it could be, a mom and dad investor, or, a young individual with enough equity in their home or enough savings. And I'm talking about 100, 200,000 in equity or
savings,
deployable capital, or because then we can set up an SPV and, group individuals together and then do a project with them. So they are part of the journey, they learn it, and then you can roll the funds again and do another project until the point where you get to do one on your own. Or high net worth individuals who have enough equity or enough savings that they can deploy into a project on their own. And then with those individuals, we can also look at the exit strategy for them at the end. It's not necessarily, exit the project, go again. Some people actually prefer to hold the asset long term because it is a cash flow positive asset class with a 15-year
commitment
plus 10-year renewal commitment on it. So from an asset safety perspective, it's one of the
more secure.
If you get it right. So we just keep saying that if you get it right, and you need to get it right, because if you jump online and you think that, okay, I'm going to get into the childcare game now, and you buy something with plans and permits, most of the time, the ones that are online, and we filter through like hundreds each week, are the ones that are in the wrong place, the wrong layout, the wrong design, back streets, etc. And we'll dive more deeper into
what that looks like.
What is the right way of doing it? Or so small disclosure, don't jump into this on your own. Happy to have a discussion and guide you through it. But don't just think that, oh, Michael's doing great with childcare developments and he's the best in Victoria, but you can't replicate 20 years of experience and dealing with the right team around you.
100%. And I love how you've kind of explained it clearly. So it's like, for those of you who are thinking this could be for you, it's really that you've got like around 100 to 200K in equity, either in your home or in saved or disposable, which some probably don't. It's most likely your equity. So you already own maybe one or two assets in your own portfolio, being your own home or maybe an investment that
Correct.
could be that vessel to get to where you guys are, right? So then once they've got that kind of like, this is who we're talking to, who it's perfect for. So if we've got your attention so far, keep listening. The next phase I kind of want to lay out for everyone is going back to your question, not your question, but what you were starting to talk about was stakeholders, because this is important. So who are the stakeholders? Like, we open up this project, we've now got the right person, they've got the equity. Obviously there's a finance component and accounting. Let's assume that that's been, that's for another episode where we'll probably bring in that person to talk about it. But once we've got those financial structures in place, buying through either an SMSF or a syndicate, like you said, who are these stakeholders and the players that are going to be with you in the journey?
There's it's further advanced than a residential, and if you can understand all your inputs to a development project, you're going to have a better chance for a better outcome. So if we unpack, let's unpack like some of the stakeholders in a childcare. These are, number one is obviously the investors in the actual project. Then we go next, probably most important is going to be the tenant, because they've got to run the business. They've also got demands operationally from childcare Victoria that they've got to abide by. And you've generally already agreed on a set of, you're doing this, I'm doing this in your lease. So they have to be respected in order to reduce risk from that tenant, either operationally that they can't run their business, or that wasn't the agreement.
Yeah, and that's like why you said you have to get that in place from day one rather than right at the end like residential.
Yes.
It's built around the tenant because they're the end users. They are the ones who are signing, a very long lease on the product.
Yeah.
So we have to make sure that whatever product we deliver,
it's delivered for them,
specific for them and their needs.
Yeah, because that's the difference, right, I guess, is because I've just kind of clocked this and put it together going, why would we start there? I get it, because you then have requirements to fulfill as part of putting together a childcare centre, like as in from a, building and compliance perspective, legal perspective. It's like, you can't just go and build a childcare centre without a toilet. So what are you doing? Exactly. It's like
everything's miniature.
That's so cute. But it's like that's a really good point. So it's like, you actually need their buy-in immediately.
It helps. There's it's a way. All these things that we're going to talk about and suggest are ways to reduce risk and ways to that we know intrinsically are the best of practice. And we live by best for project. That's what underlines and underpins everything that we do. So we always are asking along the way, is this the best for the project? And sometimes it is the best in terms of reduced risk, reduced cost, reduced time, and multitude of those. So we're always looking for best for project, which helps deliver your development with hopefully best of return.
Yes, that's the point.
So we've got other stakeholders in the project. So we have the Building Code of Australia, so NCC. We've got to abide obviously by what the guidelines, what the standards are of the Australian Building Code. We have got other stakeholders. We've got councils. We have got utility companies. We have got lenders. We have got quantity surveyors. We also we've got consultants, which are stakeholders to the project.
Yeah.
And sometimes we've also got, when we talk about getting onto site, we've also got stakeholders that are around you, like either it's a public or neighbours. So these sort of stakeholders, if you can define what their objectives are in the project, then you can understand what they're looking for, and then you can have an informed decision about what does best for project mean for us and our major stakeholders.
So then if we go, so we know that the tenant's purpose is there because they're the lot, like you said, you're building for them, right? So that's one. The client being the syndicate or the individual that's actually building, putting in the money essentially to build the project, which they're like the financial activator, which in this case is potentially you guys listening. Then we've got, tenant. Then we go to, who was the other one? I know quantity surveyor was mentioned.
Yeah, so probably the next stage, the next one down, like I'll just go back to that. The client is still the overarching, it's number one stakeholder.
Of course, yeah.
But their balance, it's not far behind it, is the tenant, because we want to protect either ourselves or our clients with litigation, with also if you if you piss a tenant off too much, then
It's a mess.
then yeah, that's right. So then you increase your risk of them walking. They'll pull apart their contract and find some loophole to get out. And so you don't want that. So you got to be respectful is probably the best term that I put it for the client, so that whatever is promised, that's what we want to deliver.
Yeah, it's about that honesty and transparency.
And it's balancing it out too, because each childcare operator who is your tenant end user, they have different requirements, different visions for their growth as well, and for their
course.
centers, like, how they want to appear. Because, for example, Montessori is very different to, your other ones, because they want to use more natural materials, etc., more open spaces. Love it really modern and futuristic, because they're building for the future, and they
Yeah.
focus more on tech and, bringing kids up, the next generation in that field. So, yeah, as Michael said, that as much as it's important for the investor to make a profit in this, it's important that the product delivers the right result. And then for us as the development partner on this journey, is it suitable for us to actually deliver and matchmake
Those two parts.
because sometimes we do have to reject projects where it doesn't suit our values. And we know for a fact that if we build this for this client, yes, we get paid for it, but we know that it's not the right thing or the right product.
It's too risky for you guys.
It's too risky. And maybe in the future, 3-4 story childcare centers will be the norm. But right now, we believe that it's too early and there's still opportunity for, give those poor kids, a nice
Yeah.
playground. Don't box them into a 3-story or a 4-story childcare center. So, it needs to make sense on so many levels, that just because you can make money on it
Doesn't mean you
probably
should.
not the right thing to do. And that's what, I really appreciate about Michael, that he looks at, what's good for Aston Construction, what's good for the investor, what's good for the childcare operator, and for the whole community.
And then you guys are kind of like that liaison between making everyone happy. I'd imagine that's like where your consultants come in, where it's like, are you happy? Good,
Huge
good,
machine.
and it takes a lot, because you're in this project, you said at the start, like 18 to 36 months, like on average. So it's a big commitment for all parties. And you've got life that happens where, people get divorced, or like someone in the syndicate needs to drop out. Like all these things are risks that I'm sure you guys assess when you take it on. So I think, the next thing would be to talk about is the stakeholders of the project. So we have some major stakeholders and we've got minor stakeholders. Talk us through, Michael and Amalia, either one of you, who are the major stakeholders in this project?
All right. So we've covered over the main stakeholder. So number one, we go back to is the development partners. Then the number one, because we have to ensure that we get the best financial outcome for them, the lowest stress, the lowest risk, all those facets. Number two is our tenant. We generally satisfy them. Then number one gets achieved as well. Now we've got a group of other minor stakeholders that we need to understand what they want and respect those. So our next one down is probably as far as the regulations and the legislation. So we've got Building Code of Australia, and we need to meet planning guidelines. So that's Victoria and also probably a local council. So if we don't respect and fulfill whatever those obligations are, then we'll not get permits.
Yeah.
Then we won't get to the start line.
And then you can't do anything, and you're not doing childcare.
Absolutely. And again, it's all about, reducing risk so that we can get to a financial outcome the quickest way, cheapest way. All right. So we move down our tree a little bit, and our next group of stakeholders that we have we've got design consultants, and these are guys like architect, engineer, and in a childcare, it's crazy, and we'll talk about that in other episodes. There's like about 10 different consultants that you've got to engage with to make a childcare project successful. Some are obligations and some you want to do so that you have the best product.
Yeah.
So we've got our consultants. Our next group of stakeholders are going to be our project delivery team. So we have got people like our building team, our contractors, and these guys. We get down to more minor stakeholding in it, but it's something that if you consider it and understand where they're coming from and what their desired outcomes are, then you can go a long way to trying to appease them. Again, smooth the project, reduce risk, reduce time, all of those
Yeah.
facets that make a good project. We have smaller, we're going down the tree, we've got other smaller stakeholders like we've got utility companies. So the last 5 years or so since COVID, the bar just keeps getting lifted and lifted and lifted.
Of course it does.
Everyone wants their pound of flesh. So the power companies, gas, water, these guys are really putting a lot of barriers and pressure on projects.
Yeah.
And we've seen projects that actually stall by, you're talking about 6 months, 12 months, because of
Yes.
utilities that have not, you can't come to some agreement, or the costs are outrageous. And the problem is that it's not like you can go to a different water board or to a different power company. You're stuck. So you got to be
Wow.
mindful and go down a good pathway for those sort of utility companies. They put risk to your project.
Yeah.
We have other minor stakeholders like our neighbours and the general public. And
I can't believe
whilst,
that's a stakeholder.
well, again, if you take a simplistic view, you could ignore them. They don't have a financial stake in your project.
Yeah.
Except when they start complaining and start publicising, start calling up authorities, this puts risk on your project, timelines drag
delays.
out.
Mm.
So it's something to consider, and then put it in context for your project.
Wow. Yep,
So
that
it's
makes
a small
sense.
moving part, but sometimes it can be just causing delays and unnecessary headaches. If you think about, childcare, where you're building childcares, you can go into new emerging suburbs, new areas, but then you also have the infill sites where, you're building on a block of land where the neighbors have been around for the last 20, 30, 40 years. So, of course, when you start to advertise that, hey, we're building a childcare here with 100 kids in it, of course, there's going to be some sort of pushback. So it's important for us to communicate with the neighbors and, sell them the idea and the concept too, and understand it that this will be good for them.
Well, I always think if you go back to residential, I like one of the things I would look for is key infrastructure being built. And, in a family-friendly neighbourhood, childcare was always a win, because it's like, well, hey, you're moving into a neighbourhood, childcare's there, you've got kids under 5, why not?
It's definitely one of the positives, and one of the pros for doing childcare is that it's it's not a high contentious type of development. So,
Yeah.
if you talk about risky sort of developments, apartment buildings and ones like that where people are straight away full against. So childcare is a smaller amount of the population are against childcare. It's not as obtrusive as a large scale development. So it's definitely a positive for childcare going into suburbs, and definitely it's a product it's an asset that's in demand in newer areas. People generally, at least one, maybe both of the parents definitely have to work, and they haven't got, like generations ago, you might have a different family structure that could look after the kids.
Yeah.
It's not so much these days. So the kids need to go to childcare, and it's a product that's in demand.
Yeah. I love that. And, I think that I love the way you've explained this, because it paints a really good picture for the audience of like, there's so much to factor in. So yeah, again, if you're going on realestate.com on the commercial side, just pause and consider. And Amalia, going over to you with, I guess the buy-in side of this thing, like where, you've got different, obviously, vehicles of like financial advice that you can talk to. It's an accountant or a financial planner, right? To talk about like what structure you should go into. But what's the most common one that you're dealing with? I think you mentioned SPV.
Yes. So for any sort of commercial development, and we spoke about the two types of investors that can invest into projects. If you're a retail investor, which is, your mum and dad with a couple of hundred or 100+ plus in equity or in your super, then we would set up a unit trust. So that unit trust is the SPV, the special purpose vehicle that becomes the project partner for Aston Construction to then deliver the childcare.
Nice.
And
yeah.
then the SPV is dissolved once the project is completed and it's either sold or refinanced. So the investor knows exactly when they're exiting, how much are they getting, what's the profit. So there's no ifs or buts. It's
Yeah.
a very certain way of getting a return on their investment. And then, of course, even within that SPV, talk to your financial planner, financial
Of course.
advisor, tax planner, because it's important that you invest to make money, not to pay more tax.
Yeah, correct.
And I love paying tax because you know that you made a profit, but if you can minimize it and do it a little bit more smart, it's always advisable
beneficial.
to set up different structures for it. I mean, I always talk about investing is a business. So then you should do it as a business, as a PTY Ltd.
That's what I loved in your last episode with us when we interviewed you. You said it, investing is a business. It's so true because you're doing it for some sort of profit, like every other business owner who sets up any type of structure is hoping for a profit, not I'm doing this for community and just good vibes. It's like you must have a lot of money.
Even those companies are a business.
Exactly. It's like the ones that say not for profit. There's money somewhere. But look, I well explained. And this is where financial planners form part of that, due diligence team, that it's like, can you do it? Financial planner, financial advisor, accountant, they're all the ones that are going to tell you exactly what the way to minimize your tax, the way to minimize your financial risk is going to work. And that's where you guys work with that team as well. So I want to talk a little bit about the pros and cons because it's the No Bullshit podcast. We have to keep it real. So talk to us about the kind of positives that we have when it comes to, childcare investing and why this is like a good avenue for someone to go down. And then I'm going to reverse it and ask you about, the risks.
Yeah, absolutely. We want to be quite realistic about a project. And if you don't consider what your risks are going to be, then that's a little bit foolhardy and naive. So certainly with any property development, there are definitely risks. We're excited about childcare because we see that a lot of the risk factor we can contain and we can identify early so that it's not an unknown. So let's talk about some of the pros. We have already talked about government assistance for childcare, also that there's more demand for childcare, increased population is putting extra demand for childcare. And childcare is good. Our tenants are also, we're able to secure a longer term tenant. The yields are actually really good for the amount of land that it's required to put a childcare on, and therefore the outlay. Now we'll talk about it in another episode.
Absolutely, we're going to get into the nitty gritty.
It's a big topic. We'll run through together the actual economics of a project. It's just a bit big for today, but let's just say, I'll drop a little bit of a teaser, and that is that look, for a childcare, you realistically need somewhere. These projects are in the nature of about, say, $6 to $8 million is the net value of the project. So the risk, when you're talking about sort of project, it's not a $300,000 sort of investment. We're upping the game. The risks do multiply as well. So you really need a good team. This all goes towards you need a good team around you to have the best chance of success. If you stuff it up, then you're going to feel a lot of pain. If you do it right, there's a really good chance now in this environment, settings in Victoria and in Australia, now is a really good time for childcare.
Yeah.
So let's go and identify some of the risks so we can be realistic about it all. All right. Number one risk for childcare is that your financial outcome is poor. All right. Now that covers a lot of topics, but let's just step it back a little bit, and it's more about, so you need to pick the property that you select, you need to pick the product that you select, and the demand area. These sort of things insulate our risk on the project. Now, we genuinely have risks for time. If we you get held up at VCAT or tribunals or planning barriers, there's a real risk for that. And what that'll mean is our return will diminish over the time. So we want to identify what those risks are, and we really want to try to contain and identify. We have risks that, again, if our selection on the project is not ideal, we may have a risk that our tenants can get out of the lease, or they want to get out. Now, if you've got a desirable product, no one's jumping out of their lease because they really want to go through with it. So it's back towards all of the topics. Again, we'll cover over in other ones about site selection. In fact, I think we're going to go on a tour.
Oh, yeah,
I'll show you around what the childcare centre looks like and a bit about site selection. So
I can't wait for that episode.
there's lots to delve into. And we're really excited to go on a journey with the listeners, so it gets them excited as well. All right, so sorry if I digressed.
No, go for it.
All right.
We're on risks.
We're back to risks. So we've also got financial risks as far as funding. So Amalia, just some of the risks for like funding and cash for project. Do you want to talk about that?
Yes, definitely. So with any project, unless you have $6 to $8 million cash to put towards, you would have to do some sort of borrowing. Borrowing generally model, and this is not financial advice to any aspiring developer, is to do the borrowing at construction phase for the construction only. So own the site, cash outright if you can, and then do the borrowing for the construction. It's a lot easier. It's a lot cheaper from a finance perspective too, to borrow money for building it. And it's a lot easier too because you can show project profitability to the lenders. So the risk there is minimized by doing all the pre-work.
And the lenders to that aspect, the lenders are looking for the same outcomes that we're looking for, and our partners are looking for, which is again, reduce risk, increase profitability. They're looking for all of that now to safeguard themselves against a disaster. So we can reduce the risk for us. We reduce it for our lending. It means our borrowing costs are cheaper. So on and on and on is a flow-on effect from that. We've got other risks in the project. We get down a little bit smaller ones. We try to de-risk early as far as the siting, the land, the legal aspects of the actual property. So we can try to understand those. And we always, when we're looking for sites, we're always going to push to our legal team to go and get advice to make sure that there's no nasties in the contracts of sale, in the actual property, like covenants and title and
come up a lot.
Yeah. So again, that's another minefield that for the uninitiated, that's a can of worms, but it's something that we know what to look for. And we've got a good team around that can advise on the particular aspects of the project.
Yeah, there's a big team behind it. And I think that's what kind of attracts me to what Aston does, is because there's project management behind this engine, and it's an engine that's been operating, you've been doing this 20 years, but like 5 specific years in, the childcare space. It just sounds like so much to do, but then like for your clients, they must feel pretty looked after.
Yeah. And that's, I think, you had to build that machine to be able to deliver the product fast and effective and efficient.
Yeah.
It's something that we intrinsically feel, and we know that cutting the corners in these initial planning stages is it's really foolhardy. And you've got to have that good team to give you that specialist advice, because then that de-risks it. So it's all towards de-risking and really understand. So, if these teams of expert might uncover some aspect that's a negative aspect in the project. So then we can, at that stage, we can really determine, what's the direction that we go, continue or not continue. If we continue, what's the expected costs?
Because we work on so many sites right now, and we've been sifting through hundreds of them.
Can imagine.
So it's really, the fish that John West rejects makes John West the best. So hence, that's what makes Aston the best, because of the deals that we reject. And sometimes I get excited about a particular location or the potential that we can do. It's going to be a great location, beautiful site. You can do a swim school next to it, and then Michael's like, yeah, but there's this covenant on the land, and you can only build one property, and it has to be this site, and then we just have to pull out of the purchase.
Wow.
So, the other risk is like, what are you buying?
Yeah.
And do you have an out if something doesn't tick the boxes within your DD period?
Yeah. Oh my God, there's so much to consider.
There is a lot to consider, and it's so that part of childcare and development is a lot more technically involved than residential. Residential's a little bit more straightforward, just build a house. But, the downsides for that residential is that it's a lot more emotive.
Correct.
It's a lot more fickle to the market. If you don't exactly hit the market with the right product at the right time, then you will suffer. But it's complexities for childcare. And this is a really good thing, because if it was simple, straightforward and easy, guess what? Everyone would be doing it.
And then it would be lucrative.
Agree. So that's why, the people that come with us on the journey, we've identified a few years ago that this was a niche product and something that if you do it right, then you will succeed. And it sets us aside from your average developer and your average builder that you have to consider these aspects. You have to put them together. We talked about best for project. And this is something that really rings true to have the best chance of success.
Yeah, it does take the 10,000 hours to become an expert, and
I can imagine
20 years is more than 10,000 hours to become an expert. So there's hardly anything that I think we come across where Michael can't just look at it and say, oh, you know what? These are the questions that we should be asking the planners or council.
Yeah.
Or maybe he just looks at it and he can like literally thin slice an opportunity, and he would say, nah, we're not doing this one. And I'm like, but why? And he can't really explain it straight away. But then as soon as we start to go through, we have quite a comprehensive selection criteria. As soon as I start to go through it, I'm like, oh, it's 0.2, 0.8. And it's like, it's failed miserably at that point. But yeah, that's why it's difficult for even a commercial developer to start going into childcare, because
no, it's very specific.
It's extremely specific, and it's very intricate because you have to get so many little moving parts right to make it a really profitable outcome, not just another average development.
Correct. And I think, look, you're going on a journey with your clients for a long time, like 18 to 36 months is a commitment. You guys aren't in the business of starting a project, like you said, that you don't think is going to be viable and bring success for all parties. And you've got a very big role to play in making sure that everyone is aware of risk. Everything's being as far mitigated as possible at the beginning. Yes. But obviously things happen, things come up, and you can do as much as possible to de-risk, but you have to accept that there is an element of the unknown. And I think that's with any investing that you do in life. It's like if you invested in Bitcoin 15 years ago, good for you. You did really well. Yes. You want to invest in Bitcoin now, it's a bit different. So you can still do well, but the buy-in's much higher. For those that bought Bitcoin at $2, cashed out really well. Don't discount it. Like for those of you listening that are hearing like high figures or high risk, I always say you're risking with whatever project you do, whether that's a small resi project, a crypto investment, coin investments. There's upside, downside, and it's about your appetite. And I love the transparency that you both brought today to actually clear this up, because we're going to go on such a fun journey on these episodes, especially the one in the property, because that's going to help bring it to life. Because I have so many questions now where I'm like, so what goes into a childcare? And I'm like, no, shut up, Joe. We're doing that next. So to sum up, I guess from you guys, is there anything that, our audience should know before we dive into the next episode? What do we need them to get ready with, or how do we prepare them for the next one?
So in the next episode, let's talk about the actual product. So we'll go into what makes that product desirable, not desirable, and how do we go about trying to understand, assess what's going to be what is going to be the best chance of having a ripper project and making lots of money.
Nice. And Amalia, from your side, anything to add?
From my side, until next episode, I guess if you are thinking about investing into childcare, start to look at your finances, talk to your financial planning tax accountant to get yourself into a position, because when these projects come up, they also fill up extremely fast.
Of course.
And if you want the best chance of being part of it, be always investor ready. So that's my best advice until we see you next time.
I love it. I think it's been so good to have you guys on. I'm excited for the series. We're going to have so much fun. And for those of you listening, thanks for always tuning in for this special masterclass series. And of course, we'll have some resources attached below for you to start the journey of this episode, right? So it's start to go through those things, get a bit of a checklist out of the way. So then when you come to episode 2, where we start to look at the actual asset, we're going to be really ready to talk about exactly what it's about. And, we're going to take you on a bit of a lesson plan through this journey as a good school teacher would. So thank you both for coming on the show today and for sticking with us for the next 6 episodes.
Thanks, Joe. It's been a pleasure to come on board and really help to educate listeners a bit more about childcare that we're so excited about, and I think it's a definite winner for development and investing.
100%. I'm going to learn so much.
Looking forward to it.
Can't
wait. See you next time.
We'll see you next time, guys. Thanks for tuning in. And this has been the No BS Real Estate Podcast, and it's powered by Aston Constructions and Builds. So please reach out to them if you need any support in the meantime. But stay tuned for the next 6 episodes. It's going to be a lot of fun. Catch you then. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodi AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodi.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodi AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodi.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.